He's making his investments talk. Business Standard. He's making plans for an early retirement. Business Standard. She has ambitions of becoming a brand. Business Standard. He's making his investments talk. Business Standard. He's making plans for an early retirement. Business Standard. She has ambitions of becoming a brand. Business Standard. He's making his investments talk. Business Standard. He's making plans for an early retirement. Business Standard. She has ambitions of becoming a brand. Business Standard. He's making his investments talk. Business Standard. He's making plans for an early retirement. Business Standard. She has ambitions of becoming a brand. Business Standard. He's making his investments talk. Business Standard. He's making plans for an early retirement. Business Standard. She has ambitions of becoming a brand. Business Standard. He's making his investments talk. Business Standard. He's making plans for an early retirement. Business Standard. She has ambitions of becoming a brand. Business Standard. He's making his investments talk. Business Standard. He's making plans for an early retirement. Business Standard. She has ambitions of becoming a brand. Business Standard. He's making his investments talk. Business Standard. He's making plans for an early retirement. Business Standard. She has ambitions of becoming a brand. Business standard. He's making his investments talk. Business standard. He's making plans for an early retirement. Business standard. She has ambitions of becoming a brand. Business standard. He's making his investments talk. Business standard. He's making plans for an early retirement. Business standard. She has ambitions of becoming a brand. Business standard. He's making his investments talk. Business standard. He's making plans for an early retirement. Business standard. She has ambitions of becoming a brand. Business standard. He's making his investments talk. Business standard. He's making plans for an early retirement. Business Standard. She has ambitions of becoming a brand. Business Standard. He's making his investments talk. Business Standard. He's making plans for an early retirement. Business Standard. She has ambitions of becoming a brand. Business Standard. He's making his investments talk. Business Standard. He's making plans for an early retirement. Business Standard. She has ambitions of becoming a brand. Business Standard. He's making his investments talk. Business Standard. He's making plans for an early retirement. Business Standard. She has ambitions of becoming a brand. Business Standard. He's making his investments talk. Business Standard. He's making plans for an early retirement. Business Standard. She has ambitions of becoming a brand. Business Standard. He's making his investments talk. Business Standard. He's making plans for an early retirement. Business Standard. She has ambitions of becoming a brand. Business Standard. He's making his investments talk. Business Standard. He's making plans for an early retirement. Business Standard. She has ambitions of becoming a brand. Business Standard. He's making his investments talk. Business Standard. He's making plans for an early retirement. Business Standard. She has ambitions of becoming a brand. Business Standard. He's making his investments talk. Business Standard. He's making plans for an early retirement. Business Standard. She has ambitions of becoming a brand. Business Standard. He's making his investments talk. Business Standard. He's making plans for an early retirement. Business Standard. She has ambitions of becoming a brand. Business Standard. He's making his investments talk. Business Standard. He's making plans for an early retirement. Business Standard. She has ambitions of becoming a brand. Business Standard. He's making his investments talk. Business Standard. He's making plans for an early retirement. Business Standard. She has ambitions of becoming a brand. Business Standard. He's making his investments talk. Business Standard. He's making plans for an early retirement. Business Standard. She has ambitions of becoming a brand. Business Standard. He's making his investments talk. Business Standard. He's making plans for an early retirement. Business Standard. She has ambitions of becoming a brand. Business Standard. He's making his investments talk. Business Standard. He's making plans for an early retirement. Business Standard. She has ambitions of becoming a brand. Business Standard. He's making his investments talk. Business Standard. He's making plans for an early retirement. Business Standard. She has ambitions of becoming a brand. Business Standard. He's making his investments talk. Business Standard. He's making plans for an early retirement. Business Standard.
Hello everyone, welcome to day 2 of Business Standard BFSI Insight Summit. Let me thank the audiences first up because more than 10,000 of you watched the inaugural session across the event website and Business Standard's Facebook and YouTube a couple of days ago. Stay tuned, we have 10 more sessions to go. Should we say yes to cryptocurrency? Who better to discuss this with than former Finance Secretary Mr. Subhash Garg and the panel of crypto experts we have with us today. We will take a few questions for the panelists after the initial discussion. Please send them in the questions box on the website. For social media conversations, use the hashtag BS_BFSI. I would now request Mr. Tamal Bandyopadhyay, our consulting editor, to take over.
Thank you, Manish, and hello and welcome. Good evening, good afternoon, good morning, depending on from which geography you are joining us. Welcome to day 2 of 9-day 11 event Business Standard Big Bang BFSI series. And today is the, I think, most exciting and most controversial day probably. Going by the subject, should we say yes to cryptocurrency? Keynote speaker today is Mr. Subhash Garg, former Finance Secretary. I mean, to use a cliche, he has many feathers in his cap. He took charge of the Economic Affairs Department just days after government rolled out GST in July 2017, if I'm not mistaken. And as Finance Secretary, he oversaw the pre-election 2019 interim budget and of course 2020 full budget. But today he is not here because of all these assisting the budget exercise and GST rollout. Today he is here because he headed the very critical interministerial committee on virtual currencies, cryptocurrencies. Report has been submitted. Parliament was expected to take it up in the budget session, but it has not yet happened. Anyway, that's a separate story. Mr. Garg, welcome. Here my job ends. I would welcome you, and please go ahead, sir, give your keynote address. And audience, after that, we'll have this panel discussion with the experts from the industry. Over to you, Mr. Garg.
Thank you very much, Tamal. It's pleasure to be on this show, and you said 10,000 plus people are listening in, so that's tremendous response, I must say. Because the subject itself is so exciting and so interesting and so evolving that so many people have so much interest in it. With more than 15 million people now on the crypto platforms buying crypto assets, this is something which is the subject of future. And it's all happening in the midst of enormous digitalization, which is taking place in the economy and the finances. And therefore, the subject is extremely, extremely relevant and important. I'll begin by sort of drawing the attention of the audience today to the digitalization of the economy and the finances, which is taking place in the system already. So the system which we have prior to what the decentralized ledger-based cryptocurrency system came in, is broadly we can describe that as centralized database system where there is a central authority which sort of maintains and stores the data and allows the people to participate, join in with limited or decided permissions to transact and to do kind of things. So that centralized system over last 25 years or so has made two big changes in the financial system. One big change is that by dematerializing the assets, so you have equity today, which is dematerialized. You don't have any physical share certificates, etc. You don't have bonds, which are and which are not any longer physical. So almost all the financial assets have been, in a way, dematerialized. Some of those assets which were not required to be dematerialized as such have been otherwise financialized and digitalized, like derivatives and both for commodities and the financial products, currency, etc. So almost all assets today are sort of traded or acted upon by means of dematerialized and the digital way. So whenever you want to buy or sell your shares or something, you go on to some platform, trading platform, and do it. That's the way it happens. So one big change in the financial world, and this is happening in the traditional centralized system, is the digitalization of the assets. The second big change, which has happened over last 10 to 15 years, is the conversion of your accounts in the banks in digital form. So money, as you know, is basically of two components. One is the hard cash currency, which you and me all use by putting into our pockets, paying in the bills of 10 rupees, 50 rupees, 1,000, 100 rupees, and whatever. So that is the physical cash, which we know as currency. And the second one is the money or the deposits which we keep in our bank accounts. So the bank account money is also used for transaction. In fact, today that is majorly used in the form of transactions. Today, 97% of the payments actually take place by transferring money from one account to another. And that has happened by almost all. In fact, in India, every account has been digitalized, core banking, otherwise, and has become now part, after the NPCI put together the UPI system. Virtually all the 65, 70 crore accounts have become part of one single digital bank, literally. And that allows the transactions to be taken place, payments to be made very easily by digitalization of that. So whenever you want to make payment, you go to UPI or IMPS or RTGS or whatever. There are several modes of making payments, and by that you make the payment. In terms of volume or physical number of transactions, still bulk of the transactions take place in cash, which is the currency part, something like 85% or so. But in value terms, as I said, about 97, 98% of the transactions take place digitally today. So these two big transformations have taken place in the traditional database system. But what it could not do, or what it has not been able to do so far, are again two big things. One is what I mentioned, that cash or the currency is still physical. That's one. And second, the international transaction of currencies are still in semi-digital mode. So when you want to transfer something to America, you use this system, because all the bank accounts of the world don't talk to each other. There is no global NPCI, and all the global accounts are not part of one system. And therefore, it uses banks on two different sides. In between, there is, again, you'd use the SWIFT systems and otherwise. So it takes about 6 hours to 1 day to make the payments internationally today. And that is where still a lot of inefficiency. So one, physical cash still exists. And second, the international transactions don't take place very efficiently today. When the Bitcoin, and that is where I come to the cryptocurrencies part now, when the Bitcoin was designed in 2008-9, it was designed to solve these two problems. That we will create a digital currency, not a bank account currency, the digital currency. And by making that currency available to everyone in the world, you can make the international transactions and the payments instantaneous. And you do away with the inefficiencies which are there in the system of international transfers today. So these were the two main purposes why this came in. And the Bitcoin was slow to start, but slowly, it picked up. It has become, it has now gone into virtually every geography. But as it was moving forward, it was gaining traction. It got massively transformed. It did not remain a currency. It was not used for payments or settling the transactions. It acquired the nature of an asset. People saw value in it. People saw that this will appreciate. There was much more demand for it than the supply. It's restricted to 21 million pieces, so to say. And that also is sort of, you can add by a very slow, medium type of the mining, etc. So supply being limited and the demand being excessive, the cryptocurrency, the Bitcoin, acquired more of a character or nature of asset rather than the currency. And that is what is the status today. But what the underlying technological innovation, which is the blockchain and the cryptography, which allowed the cryptocurrency like Bitcoin to come in, these two proved to be far more valuable and disruptive in the digital space. And it created several other products and services. Even in the currency space, for last few years, you see quite a few stable coins have come in. The stable coins are pegged to usually the dollar as far as the international experience is concerned as of today. And since they peg themselves one-to-one to a dollar, Tether, for example, USDT, as we know, it then has sort of solved, or it is trying to sort of relieve of the problems which Bitcoin suffered, which got into the assets, and the USDT and the USDT remain more of a currency, being a stable coin and convertible almost any time with $1, one USDT, that kind of thing. And that is today acquired a lot of international traction in terms of currency. About $70 billion equivalent of USDT are out in the open. There are other currencies as well, which are similarly stable coins. I'm told USDT has about 30-35% share of the stable coins. And these stable coins did two main services. Number one, it allowed the sovereign currencies to be sort of converted into a digital currency. And then that digital currency can be used to make all kind of transactions in the cryptocurrency space. And over 7,000, 8,000 of the cryptocurrencies and other products which are there can be bought and sold on the USDT and these stable coins. So that is serving the purpose of the currency much more. The other products which came in, for example, let us say Ethereum, which has created an excellent platform for programming, for creating products, for creating services. And now many of the services which otherwise were being delivered on the centralized database system are now being delivered on the decentralized system, including even finance. You have decentralized finance, which is picking up very fast all over in this space. So what the cryptocurrencies or the crypto assets or the crypto platforms have done is that they have sort of provided an alternative digital system, an alternate digital architecture ecosystem to do what otherwise you were doing on the centralized system. And it also allows you to do something which was not being possible on the centralized system. And in that sense, it is much more versatile and good technology. So that is where we are now, and people are now creating all kinds of products. So you have, besides the currency, which is a product, you also have, as I said, you can program, deliver services. And the new innovation like NFT allows you to sort of deal with the problem which the cryptocurrency world had, where you can have individual assets, individual work, sort of created and protected and stored and allowed use in such a manner that the individual who is the creator of that can provide permissions or otherwise. And that NFT has enormous applications for the future assets of this thing. So what I see is that the crypto world, the blockchain and the cryptography world has now come of age and is creating enormous amount of value. Before I answer the question which is posed today, let me say that the crypto world which is there also suffers from two major problems. One is the big problem. There is no way you can determine the value in the crypto world. Today, there is a very peculiar characteristic of the cryptography or crypto platforms. They're the capital, the services, and the programs and other things which you can create, which are priced, all are rolled into literally one value system, which is the currency of that particular system. So Ether raised capital in the form by issuing Ether. You can do a lot of work or create services by paying or receiving the payments in Ether and all. So Ether is in a way the currency of that world, right? And the other major innovation which this technology has brought in is the smart contracts or the self-executing contracts, which allow a lot of other services to be delivered and more efficiently performed than the centralized system, which is not good enough for the smart contracts. So as a result, you find but how do you value it? You have no way to value that system. There are international players who are trying to create some system for valuing it. In US now we have where platforms or the providers who are able to value in inter-se cryptocurrencies were. So one cryptocurrency to another by using how much is the price, but that's largely based on what is the market saying about the price of that particular cryptocurrency and relative value thereof. But the real value is still no way to ascertain. And that is the problem when, whether it's Bitcoin or anything else, whenever somebody is buying or selling, he or she does it basically based on the faith that or the belief that this will rise. So again, after it had gone down to $30,000, it has come back to 65, 67. People believe that it will go to $1 lakh or something. So these are all opinion valuations. These are not the valuations which you can do on an objective in terms of the revenues or in terms of the future capital or discounting, whatever. So those, I think, until we develop or until the world develops a way to value the real worth of the crypto platform, there would be this lot of uncertainty, speculation, and this kind of up and down volatility which you see in the crypto world today. That, I think, is the biggest problem. A minor problem is about the massive use of electricity and power, but I think that problem would be solved as we go along. There are now different systems instead of proof of work, proof of stake, and many other technologies, systems will develop, which will make sure that this problem is solved. The decentralized database technology also didn't develop in one day. So similarly, this decentralized database technology will also take some time, but these problems would be solved. But the value problem is the real intractable problem, and that requires. That is where I come to the last part. If I can attempt to answer the question which is being posed, should we say yes to the cryptocurrencies? I see this in three parts. One, let us say the currency part. And the currency part has two basic dimensions. One is the private cryptocurrency part, which is what is happening today. My sense is that sooner or the later, the governments and the sovereigns would also come up with a digital currency. And I don't see any reason why the US Fed or US government system is not able to come up with an electronic or a digital dollar. If private system have come up with $70 billion or $200 billion of value, which in a way is hurting the Fed, because the returns on the investment which the platforms can make from the dollars delivered to them is accruing to the platforms like Tether, not to the government. So I expect this to come very soon. And my sense is that once the official digital currency comes in, most of the private currencies, including stable coins, will disappear. That currency part will not survive much. But the other part, which is the crypto platforms like Ethereum and others, which provides enormous kind of services, I think these are the future. This technology is the most versatile, is most competitive, more efficient, and it will develop into more of that. So I think those platforms would survive. So we should, in fact, say yes to that technology. We should develop. We should embrace this and take it forward. And finally, I think if in the context of India, rather than experimenting with the CBDCs, wholesale, retail, etc., we must come up with a very simple, straight design. There are two big options available. Either you can use the same thing which you have used for so far, dematerialize your currency, cash, and with that dematerialized cash or rupee, you can allow all the digital transactions which can take place in currency. Of course, the physical system will survive. India never changes in one go. So that's what is possible. For wholesale, we might think of some of the cryptocurrencies, but it may not be a great idea to have two when the system. So let the Reserve Bank and the government take a view clearly about. And the last thing I would say before I stop is that the real problem which the government should solve is, I don't see any possibility of the crypto platforms doing transactions in anything other than their currencies. or their own system of value transfer, and that is too embedded, and everything is rolled into one. We in the government should figure out, we in India should figure out how to deal with that, how to allow that to take place. And then I think it would be a great idea if we can bring something like what we did for the securities contract transaction, or that law. If we can bring something like cryptocurrencies transactions law, and deal with the problem of the crypto platforms, how to allow the use of their currencies on those things, and how do we value and then regulate the system of the cryptocurrency, not most currencies, but basically the assets, platform, services, and their use. Thank you very much.
Thank you, Mr. Garg. As always, very detailed and a lot of homework and extremely interesting. So our keynote speaker has actually laid down the what would I say, roadmap, what it should be done, right from the evolution of cryptocurrency till now. And if I have got you correctly, Mr. Garg, what you were suggesting is this: no, it's not a currency, it's an asset or a commodity. So treat that way. But how do you ascertain a value? That's the key challenge. And so now over to the next the panel discussion. Five of the gentlemen joining this panel discussion. They are alphabetically, I'm reading out their name, is Ashish Singhal from CoinSwitch Kuber, Nischal Shetty, WazirX, Nishit Desai, Rajiv Agarwal, former whole-time member SEBI, and Siddharth Sogani, Crebeco Global, credit rating for exchanges, blockchains, and coin offerings. So very interesting panel. They have their different point of views. Mr. Garg has already outlined the issues. I'll just quickly have a little bit of thing what I to set the context, few lines, and then we will start our discussion. At the end of it, we'll take a few questions. Already the questions have started coming. One question for Mr. Agarwal already there in my question box. At the end of it will be, and Mr. Garg is kind enough to stay back and take the questions as well. So let me give you a sort of sense what's happening globally and in India at this point of time. Frankly, it couldn't have been a better time for this discussion because Bitcoin rallied to record $66,000. All of us know, after the launch of the first ETF in US. AC Security Exchange Commission Chairman Gary Gensler has said they will provide significant investor protection, quote unquote, significant investor protection. Now, El Salvador is the first country to use Bitcoin as a legal tender alongside US dollar. What's happening in India? India is the second in terms of crypto adoption. That's what I'm going by Chainalysis, which is a blockchain data platform. Crypto adoption up 881% last year. Not the millennials alone. Anecdotally, I can see that HNIs, family offices of industrial houses, they're all rushing to crypto, embracing it as an asset class. Banks have eased their asset as their curve, allowing purchase of Bitcoins and other cryptocurrencies. They are using transaction through UPI platforms. All of us know that in 2018, Reserve Bank of India has banned it, but Supreme Court overruled it. More use for bill payment, FASTag, etc., are now getting done through crypto. Yes, China has banned it, but Japan, you see what's happening. One anecdote, Nomura, the biggest brokerage, it started offering subscription to a luxury Italian food delivery service where customers can use tokens to buy and trade dishes as their value fluctuate. And owners will, the tokens can trade them next year. So that's how crypto is creeping in everywhere. Dr. Raghuram Rajan, former RBI governor, he says crypto has a potential future and asking for quick, appropriate regulations. Cross-border payments is one of the area. But all of us know that Reserve Bank of India against it. The interministerial committee, which has representation from various regulators, including SEBI, RBI, and others, what did it say? The four key thing is this: ban crypto. That's the three-letter word ban, B-A-N, ban crypto. Second, it said that we should go for central bank digital currency, which is completely different than crypto, which there's a separate discussion altogether. Third, it says that, closed loop token is fine. Something like HPCL does it for their customers and all. So one particular entity wants to use token for its own customer base, that's fine, but not that mass circulation thing. And finally, it said that blockchain, the underlying technology is fine. We should encourage it. Lastly, it says that IMF, very recent comment I'm saying, it could impact a country's macroeconomic stability. So IMF is not in favor of crypto. And IMF tweet recently, I'm just quoting the tweet: privately use crypto assets like Bitcoin. And it happened before Bitcoin touched, the tweet was there before the Bitcoin touched $66,000. It says privately, IMF tweet says privately use crypto assets like Bitcoin come with substantial risks. Making them equivalent to a national currency is an inadvisable shortcut. Here I end. So I'll ask each of you to give some preliminary remarks, and then we'll get into the micro issues. First is, what do you want? Should it be banned? Should we say yes? Should it be regulated? How, where, what? All those kind of whys you'll get the answer. So I'll start with Ashish, the coin switch Kuber. This is the latest and the second, the unicorn in this space. Second, last week it happened. So you should kick off the discussion, Ashish, for about three minutes odd, each of you. Ashish, over to you.
Sure. Thanks, Mr. Tamal, and thanks, Mr. Garg, for amazing remarks. So we as an industry also believe that as a currency, cryptocurrencies have evolved much beyond that. So that is why we have started calling it crypto assets. We believe that it started as a currency, as a replacement for currency, but through the period of evolution, it has gone much beyond. Today, the infrastructure that we are building today, the kind of lending, borrowing systems that we are building, the underlying platform itself has a lot of value, and every company that is creating that value has a token economy for incentivization and building that use case forward, right? So the next Google, the next Facebook, the next Twitter would be built on blockchain, and this would be the new norm going forward, right? So the discussion, obviously, crypto not as a currency, as an asset class, maybe classified as in security, where people can invest in these new ideas and can flourish. As these ideas flourish, through their natural cause, people gain advantage on being the first one to invest in these cryptocurrencies, right? So as an investment tool rather than a currency itself, and providing platform for innovators and users to develop and build new ecosystems, which are not just solving the use case of India, but probably solving the use case of the world and built in India. Right. And there are multiple examples of that within our ecosystem: Instadap, Matic, which are doing amazing things for the ecosystem, building the ecosystems all together and adding the value to the investors who have invested in them. Right. So this is the brief journey that the cryptocurrency in itself has gone through, from a currency to an asset class. How we think toward the future is that crypto and blockchain cannot be separated out altogether. People say that blockchain is good and crypto is bad. It's like saying, the internet is good and the browser is bad, right? It is creating an interface to use that technology. So crypto is there to create an incentivization model on which the blockchain would evolve, right? So both goes hand in hand and both goes together, right? So creating value over time, building more use case on blockchain and cryptocurrencies is what we see as the future of this economy. And cryptocurrency exchanges like us play as the gatekeepers for people to invest in these different use cases. I'll end my remark there, Mr.
Okay,
Tamal.
thanks.
Happy. Yeah.
Thanks, Ashish. Thanks, Ashish. I know if I go alphabetically, Nishchal should come second, but Nishchal, I'm not asking you because two exchanges. So we have a very good mix among the panelists. So let's have somebody else, maybe probably Nishit Desai. Sir, Mr. Desai, from the law firm's point of view.
Yeah, I think this is a wonderful session. Thank you so much. And Mr. Garg really summarized the whole scene very well. The way in which I'm looking at the question, right? Is it time to say yes to cryptocurrency? I think we have already passed that stage in some ways. And even Supreme Court has indicated, if you look at the judgment as a whole, to say that, okay, to ban would be too harsh. And, you know, and that was one of the important things when it struck down RBI diktat. So first thing is that, yes, I think now time has come, not just to say yes, but I think now let's see what is next. You know, how do we regulate? Who should regulate RBI? Because if you say it's money or equivalent of money, RBI. If it's security, by the SEBI. Is it something else, the asset? You know, whatever it is. So I think, and another interesting, there are a lot of philosophical issues involved here. In fact, the whole thing, we started getting involved in sometime in 2012-13, not because I started looking at it. I think my children, the kids, and they started talking about it, and they had a very different philosophical approach to the whole, you know, way in which the governance happens and stuff like that. And so it made me think that let me look into this and then do research, and then found very interesting nuances to that. So, you know, as far as the new generation is concerned, it's embracing it very, very fast. Okay. And as you rightly said, that other, you know, family offices and others are also now coming up. If Bitcoin would not have been called coin, okay, a lot of these problems perhaps would have taken a different discussion. The moment it said coin, I mean, the mind was that, oh, it's a coin, it's money, okay. If it would have been called a point, loyalty point, bit point, it would have been different. Today, which is the biggest, if I may in lighter vein say, which is the biggest financial market outside the normal financial, you know, sector, is the loyalty points. Loyalty point, if you see, if every airline used to have their own loyalty point at one time, then they started exchanging with others, then with hotels, then now American Express, you can even buy silver utensils and gifts and everything else. So it is also a currency, if you put it in that sense. Everything, I can even buy points, okay? So the whole nomenclature created also some problem. Of course, it did not fall into the definition of Coinage Act and other kind of thing. I won't go into details of the legalities, but that is very important to note that there are nuances to the whole thing. So it's currency, is it asset, is it security, and who should be regulating it? But I think we have come to a stage, not whether we should or we should not. I think we need to accept that currency, crypto is there to stay, but whether, how should we protect public interest? I think that is where the major focus should be. And, you know, so we have to now decide that who should be regulating it. What are the standards of regulations? As a matter of fact, when all these ambiguities are going on, we worked on self-regulations, and industry has been, at least good players have adopted those ones. Not they all accept only check payments and KYCs and stuff like that. On its own, industry has embraced. So we said, if nobody regulates you, better regulate yourself. And I think today we have moved faster because people are able to answer. So I think its time has come to embrace the crypto. And one or two very interesting points Mr. Garg made. One, that who is a valuation, or who does valuation of this kind of thing? You know? The way in which I look at it, and legally I would, in a later way, and again, I would define there's a difference between price and value. Price is a function of demand and supply. value is a matter of opinion. Value is a matter of perception. Okay. So what has happened is whether it's crypto is an asset, is it is it a work of art? So people have been having their own perception. In fact, in 2014, we had a thought leadership conclave as a firm. We did it, and our a leader of crypto, who is a professor and a PhD in artificial intelligence, he said in 25 years, crypto would be 2.5 million. So please make note that I'm not advising, I'm not talking. And we all laughed out because it was less than some $100. I don't know what price was it. And said 2.5 million, who's going to look at it? But today, we can't say no to that kind of thing. So it was a perception we did not know about it. The calculation which our AI expert did said 2.5 million in 25 years. And there was no linkage to the whole thing. But people began to believe that there is a value. Second interesting part of this game is that because the supply is limited as far as Bitcoin is concerned, when you have a limited defined supply, price discovery is better. Today, it's similar to gold. Nobody knows how much gold is at the end of the day in the world, somewhere in the mines or under the earth and everywhere else, unless it's out. So, you don't know. The perception is that gold is less than silver, and therefore gold is more expensive, okay, or more similar. But when you have exactly a defined quantity, like Mona Lisa is only one painting, okay, in the world. So you may be able to say, okay, I'm willing to pay, this is the only one. So I'm willing to pay X amount of $100 million, whatever number, right? Similarly, now I have a defined quantity of 21 million. So that is why people feel that a whole game will be played within this ecosystem, and therefore prices would go up or what. Their perception, again, a lot of speculation. One strong advice we are given to all our clients and also the public is that do not invest in crypto just for the sake of greed. Okay, if you believe in philosophy, otherwise, because if you just get in without thinking, you're more likely to lose. You do not know. So take the risk. If you can afford to lose, come in. And that was the first message I had personally given in 2013, somewhere reported in the newspapers as well. So now people are taking calculated risk. People are also recognizing that one day it could be 66,000, second day it could be 30, it could be 40, very volatile. But only if you can live with that, that is the education that we need to give to public. All the disclosures should be made. And I think that system works on two wheels in some ways. One, there would be regulations. And second, the industry will have to put its own standards of disclosures, warning, whatever you want to get, so poor people are not sucked into. And that is one thing. And one small point I will make, I know I am short of time, is that there is a perception that this is not traceable. So, there are illegal activities happening, and true, it is. But if you look at crypto, is more traceable than cash. If somebody hands over cash, it's gone one place to another and finished. You can't know. And we have seen number of cases we end up where crypto, you could trace who committed fraud, who committed X, Y, Z. Police was informed. Immediately, people could be found and arrested. So one way of looking at it, that crypto is more traceable than the cash. I will stop here. I think I know anxiety on your face.
No. Thanks, Mr. Desai. No. You'll have much more time. We have a lot of time left. Sure. So this is just the preliminary comment. Yeah, let's ask Siddharth, the crypto and blockchain rater. Over to you, Siddharth.
Thank you so much, Tamal, and wonderful to be here. So yes, crypto is a very, we all should say yes to crypto. Just like how Mr. Desai just mentioned, you shouldn't get into it without thinking. Don't go all in. Some of the clients who we consult, we told them, in a few years ago that, just don't allocate more than 5% of your wealth into crypto. And now that 5% has now, if you see their portfolio size, it has gone up to almost 30%, right? So it is creeping in slowly, and it is really unprecedented. Okay, so the economists who used to teach us, like Jane Keynes and all these guys, they haven't really, that the economist which teaches you decentralized ecosystems are not yet there. Okay, so it is very unprecedented, and since this is the first trustless way to transact between two parties in the history of mankind, right? We always use a debt instrument. We always use a central banker, and the central bank takes the responsibility. It says, I promise to pay the bearer. That means we are trusting RBI to honor that note. But Bitcoin is direct, it's peer-to-peer, it's trustless. The two parties don't need to know each other. And also, internet is global. All the countries are trading with each other, but they are majorly using the US dollar or the pound and the euros for transacting. And that gives that nation substantial power when it comes to any geopolitical decisions. So Bitcoin is bringing everybody at par. I would say it is bringing humanity at par, because it is not differentiating between who's from China or who's from Pakistan or who's from US or India, right? Everybody has the same rights. All they need is a mobile phone, or any internet device. Any device which is connected to the internet. Could be a $50 smartphone. You just need a wallet and you can access the global ecosystem. Further to add on, from from a previous comment, like, see, money is universal, and it is the user's choice, right? It has to be used globally. I mean, it is a characteristic of money to use it for good, bad, or to buy, right? So I believe treating it as a commodity, and so this is a new thing, right? It is also a commodity and also a currency. It is unprecedented. So we shouldn't just stick to the commodity part, but also see, and there have been thousands of use cases, right? So it is unprecedented. A lot of people are using it as a commodity, as well as to invest and to grow their entire portfolio size. And some people are actually using it to transact. The crypto ecosystem has grown far beyond. A lot of people don't even know, but there are more than 6,000-7,000 currencies out there. Thousands of projects are evolving into this. Several VCs and investors are now crypto focused, right? So previously, the PE VCs, they used to be just some of them used to be just app focused, or traditional business focused. Now there are VCs who are crypto focused, and this is really great. The user adoption is growing, as we know. And in the last 1.5 years, I've seen the opinions of people who used to think that crypto is a scam or a Ponzi scheme. Those opinions are changing. I remember, 1.5 years ago, Mr. Garg was also on the panel, and I have seen the perception, the understanding of crypto has changed. A lot of people have started reading about it. I have understood the philosophy, and the change is now, I mean, it is inevitable, right? You have to embrace the technology, and technology keeps evolving every minute. So I'll close my remark here. Over to you, Mr. Tamar.
Thanks, Siddharth. Now we'll keep Mr. Agarwal waiting as the last speaker. So I'll go to Nischal, another exchange. Yeah, over to you, Nischal.
Yeah, thanks, Mr. Tamal. Look, I think the question whether we should be part of it or not, I think that has been answered by the people in India. We have over 15-20 million people today in India alone who are part of crypto. The bigger aspect that we should all look at is, how do we dominate this sector? And I'll tell you why we should be thinking about it in that direction. If you look at the last 10-15 years of India's progress, technology has played a large part in it. And we today celebrate all the startups that initiated 10-15 years ago. They're IPOing today, and we've seen that success, the kind of employment they've generated. And crypto happens to be that next evolution of this whole tech progress that the world is seeing. So the question is, when India has already seen the benefit of being an early mover and being an adopter of technology, should India not look at this new paradigm in financial technology? And should India sit on the sidelines and lose out? So we already have data of progress as a nation when we participate in technology. The other part of this is, how do we do this? How do we dominate? And I think this is where all of the startups that we are seeing in crypto today are laying that groundwork. But there are a few things that we have to do even better as a nation. And I think the biggest two things are, we have to educate and we have to regulate. And I think these are the two important aspects that at least the education part, anyone can do it and we're all pushing for it. The regulation is where regulators and the government will have to step in and step in sooner than later. Look at the, let's look at the market cap. For example, crypto today is over $2.6 trillion. Now, when you look at a market size that big, then again, you should ask the question, do we really decide whether we should participate? Or do we decide how do we dominate a $2.6 trillion market cap out there? And how do we build companies and how do we participate so that we can eat up maybe 30, 40, 50% of the market? And I think that's the direction we should go as a nation. Recently, now, when you think of crypto, you should probably think of it like the early days of the internet. And one of the most important significant changes that happened is everyone had an online identity thanks to the internet. Everyone has an email address. And I think that's the direction where crypto is going. Where today we have 20 million Indians in crypto. But I think there'll be a day where everyone in India is going to have a crypto address or a crypto wallet. And all they need is a mobile phone, which the penetration of which is increasing in India. And the other aspect is India is a young nation. And if you look at the demographic of crypto, it's filled with youngsters, like the 22 to 30-year-olds. They're like the dominant demographic in crypto. So if you just look at these stats, it's just very apparent that India is sort of sitting right there at the middle of it. And India is ready to participate in something like this. So I'm super excited. I mean, the growth this year of crypto alone, most of the, like us as an exchange at WazirX, we grew like 8 or 9 times in terms of the number of people using our exchange. We grew from 1 million to 9 million customers in just 1 year. And, it's less to do with, I would say, us doing anything great. It's more to do with crypto growing, that people are naturally coming onto the platforms. So I think for India, I think the time to question whether we should be part of it, that's long gone. The question is, how do we dominate this?
Okay, thanks, Nischal. So we heard two exchanges, one rater, one law firm, and of course, Mr. Subhash Garg. So till now, it's sort of is a consensus. Is this? I mean, we have already said yes. The discussion should be like how to take it forward. So let's hear Mr. Agarwal, former full-time member SEBI. Sir, you are the last speaker.
Thank you, Mr. Tamal. First of all, I would like to correct you. I am not a full-time member SEBI. I am
X. Yes. Excellent. Yes.
Thank you. Friends, as said by other speakers also, that we are in the age of digitalization, and probably it is not possible to stop the progress of digitalization. And we have achieved significant efficiencies and benefits from the digitalization. And we have also been able to reduce the impact of Corona because of digitalization. And we have come out of it with a lesser impact as far as the economy is concerned. So there is no debate about that. Digitalization has to go on, and more and more products will become acceptable in the market. Now, coming to Bitcoin, as this is not only a technological progress, as this product is also being promoted as a future potential currency. Therefore, there has to be a much more serious scrutiny and debate over that. If anything which has the potential, or which is being argued to be a potential contender to be a currency, then we have to examine the aspects. examine this aspect from different point of view. I would, as far as my views are concerned, I have divided in two parts. Number one, the eligibility aspect, and number two is the risk aspect. Okay, so if we treat or if we consider Bitcoin as a currency, then we have to see, I mean, whether it is eligible to be currency or not. A very basic and traditional argument, and which I would say, at least I consider, that holds true in all times. Number one, the currency, which is the item, with the asset, which may be considered as a currency, has to have intrinsic value and also has to be a store of value. Should be eligible to have a store of value. As far as these two aspects are concerned, I am not getting satisfied how Bitcoin is having intrinsic value unless it is being considered a currency. Suppose tomorrow it is not considered to be a currency. Suppose it is not allowed to be a currency. Then what is the intrinsic value? So intrinsic value is not there, as is the case with the gold or other bullion. Number two, it is not a store of value. It cannot be considered a store of value at this point of time, at least, because it is highly volatile. And the value is changing every day, and it is changing so much that it is not possible to store your wealth into that. Of course, you may part away a part of your savings or your gains from the other markets to Bitcoin, and as is happening at this point of time also, because the markets are very bullish. People are earning a lot of money from the stock market. Therefore, they are finding it very convenient to allocate 1 or 2% of their gains into the cryptos also. So, I mean, that is fine. But if you really want to put your savings as, or maybe a very large part of the savings into cryptos, I think that will not be a good idea. So it cannot be, at this point of time, at least, it cannot be considered a store of value also. And another thing is that this is a peer-based currency system, which is based on decentralized ledger system, which is completely new to this world. I am not commenting on the efficiency of that system. That system is being considered very efficient and which may be very useful for other areas. But as far as this system is concerned, the very important part of a currency is that either it should have intrinsic value like gold or other bullion, or it should have a faith inscribed on it. So how the fiat currency is valuable? Because it is guaranteed by the sovereign. So it is having the stamp of faith. It is having a stamp of faith by the central banker. Otherwise, what is a dollar? Nothing. What is the 100 rupees note? Nothing, unless it is backed by the government. So how a common man, how a citizen will have faith in a currency while accepting it, unless either it is having intrinsic value, as it was the case in olden times, or it is having a stamp of a sovereign. Now, this may be argued by the youngsters. Okay, this is a decentralized system. This is a peer-based system, and no manipulation can be done. Of course, that is highly debatable whether it can be manipulated or cannot be manipulated. I mean, this is just being claimed. Who has audited the system? Who has scrutinized the system? I mean, still everything is in black box. Anyway, I'm not going to that aspect. But what I'm trying to say is that this is not having the attribute of a traditional currency. Okay. Now coming to the risk part of it, because of its pseudonymity and the anonymity character. Of course, somebody will argue that it is not anonymous, it can be traced. It can be traced, but how difficult it is to trace? Will it be possible in day-to-day life? Even the transaction time is so much. How much time will any regulator find to trace a transaction, and that too at an international level? So that can be only for the argument's sake. But in the day-to-day work, that doesn't work. And there are so many instances in USA of ransomware, where the Biden administration has also alerted the agencies that a lot of cases of ransomware are taking place. And lot of cases of money laundering and other crimes are also being reported. And because of its anonymous character and pseudonymous character, it is possible at least to be used by the criminals for various criminal activities, maybe for the drugs, maybe for the terrorism, and maybe for money laundering. I give you one example. I'm not making any allegation, but the thing is that in India, we are having 10 crore users or names who are participating, to 10 crore clients who are participating in the exchanges. Now, in the whole stock market, the participation is by 2-3 crore people. So why this gap? That means people are trading in multiple names. So this issue needs to be considered, whether proper KYC is being done or not, whether it may lead to, I'm not saying, I am not making any judgment over it, but I am just saying there are so many facts which are coming out, which may indicate that this system is prone to be misused by the criminals or by the money launderers or by various other kind of desirable activities. Now, and very important risk which I find is that if cryptocurrency is accepted as a currency, is that will be diluting the central bankers' power and the system. Now, I have read the arguments, and they were, of course, at least in the beginning of when the Bitcoin was coined, that was around 2009, and probably it coincided with the global financial crisis also. At that time, the central bankers were finding them, central bankers as well as Fed, were finding themselves on a very weak moral ground. So there was a lot of agitation against the bankers, the banks and the regulators. So the logic was being given that the central bankers are responsible for erosion of wealth of the people, and they are printing currency as whenever they want. So there is no control over the system. Therefore, there should be some currency which is completely decentralized, which is not in the hands of the central bankers. Therefore, it doesn't lose value. Accepted. Okay, central bankers may not be performing, might not have performed their job well. I mean, if that is the argument. But is this the solution? That you take away the power from them and give to the market operators? Now, who will rule the value of the cryptos? Don't you find in the stock market also, and at least in the 10 years or 20 years back, the people who were having the maximum stock, they were ruling the price of the stock also. And pump and dump has been very popular technique to rig the market. Will it not happen here? Whosoever is having the stock of the Bitcoins, or does anybody know who is having how many Bitcoins? Or will you have any technology to find out who is having how many Bitcoins in the world? And if those persons who are having the major chunk of the Bitcoins, they tomorrow start controlling the system, they start controlling the price of the Bitcoin also, and also they try to combat with your domestic currency, then what will happen? The central bank will lose complete power over the monetary system. Do we want that kind of system? If I accept that central bankers or the Fed has not acted properly, though that may not be the case, they have got a lot of merits. They have handled the crisis last time. They are handling the crisis this time also. So it will be too rude to say that they have not performed their job. But for the argument's sake, even if that is accepted, that there are faults in the functioning of the central bankers, then we have got a system in the democracy to rectify that. We can raise our voice through the democratic system. Tomorrow we will be able to rectify them. Tomorrow the next government will be obliged to bring changes in the powers of the central bank or the methodology of the central bank. So there are systems in place in the democratic system. But if tomorrow you find that certain external operators have started the controlling system, what is left with the citizen? Who will find? Who will complain? Who will fight with anybody? So it's not so easy. So this is a very major risk I am seeing. And one more point, Tamalji, which I would like to...
Sir, quickly, if you can, then we can get into many of the questions you raised. We can go, unless you want to. Yeah, can you just quickly? Yeah.
And this regulatory system has evolved over the years. We have come to a stage where we used to depend upon the invisible hand of Adam Smith to the central bankers or the central regulators. So there is some merit into the regulatory system. So demolishing that system, having some kind of agitation on certain issues is not a good idea. And as it is said, the markets may not markets may remain inefficient till you become bankrupt. So, so the thing is that there is a need for regulation. So I think we have to.
Thank you, Mr. Agarwal. I think there's the first voice of dissent, and like any good debate, we have different point of views. So all four of you were in the same boat. And Mr. Agarwal, Rajiv Agarwal, former SEBI whole-time director, is completely against it. So you have already said yes. He's saying no. So now
currency. It cannot be used. Any other use if you find, you do it. But I have point of
yes, we'll get to that. So there are many questions coming up already. Rajendra Agarwal, Sukhdev Singh Bajaj, Shamak Lohade, Saurabh Kumar Sinha, Gurinder Dua, Hekwood. Many questions, and some questions are pointed to, like they want Nischal to answer, they want Mr. Agarwal to answer, etc., etc. We'll come to that. Let's have a quick certain micro issues first. I mean, what we have seen is this. I think four of you said that accepting it, but it should be regulated. Now, my question is, and I'll ask Mr. Desai to kick off. Not too much time, maybe one minute, 1.5 minutes each. How do you regulate it? Because it can't be slotted. I mean, there's no underlying asset. And as Mr. Agarwal said that it's not a fiat currency. So who will own it up? Reserve Bank of India definitely is coming to regulate because it said no to it. SEBI has said no to it. And it's basically, and they would prefer ban to regulation because like gambling, it's banned. Then somebody is caught gambling, then it becomes a criminal offense. That is far easier than something which does not have any underlying asset, which cannot be slotted. So if we go for regulation, Mr. Desai, can you just tell us who should regulate it and how it should be regulated? And then we'll ask others also. Yeah. Your voice, Mr. Desai, you are on mute. Sir, you are on mute. Mr. Desai?
Okay. Yeah, sorry for that.
No, it's okay. Carry
on. So, very interesting discussion. First question is whether we should have it. Can we be part of this movement, or some people call it revolution or otherwise? Okay. I think overwhelmingly I've heard that, yes, we should be part of this revolution. Number two, who should, there are certain risks. As I mentioned, there are benefits, there are risks. Right. So obviously as government's job is to see that, it should be regulated somewhere. Now, if RBI says no, we don't want to regulate. If SEBI says no, we don't know, we can have another special authority to regulate, if at all, because who can understand the industry and who can deal with that. And regulation and promotion has become very common, this development as well. Okay, so specific regulations that are required, who will regulate this, I'll keep aside, because it is up to the government to decide who should be appropriate person. I personally think that if necessary, a separate regulatory authority can be developed, so who understand. Now, first thing is that licensing regime needs to be developed for crypto exchanges and crypto intermediaries. And they should have very strong KYC norms, net worth, fit and proper criteria. SEBI, I feel SEBI would be also a good regulator to, for trading platforms. Okay, or whatever, as I said, who will do it is different. Recently, it was announced that SEBI would regulate spot trading in gold market, for example. Okay. Similarly, it can also regulate trading in crypto market if they want to. So another, crypto intermediaries can be made reporting entities. Okay. World is becoming more and more transparent and open now. All said and done. And today, if you think that something cannot be in the newspaper, tomorrow morning it will be in the front page of newspapers. And other thing is that this crypto intermediaries would be responsible under the Prevention of Money Laundering Act. Okay, already the number of laws exist. We have not taken stock. In fact, we have taken stock separately in a report. But number of things are already in place. Suspicious transaction, this, that, I won't go into the detail. Then amendment and guidance should be issued in the FEMA. Okay, tax-related laws. I think there is one upside which we are forgetting, that there would be significant tax revenues arising out of this, either indirect tax, whether it should be GST, or whether there should be income tax or whatever it is, but it is likely to give some good revenue as well overall. And as far as currencies are concerned, there is no specific provision to crypto, and therefore that leads to several ambiguities. And other point is each crypto is different. I understand there are over 10,000 types of crypto assets, and they could be payment tokens, utility tokens, and stuff like that. So, it is not that one party can just dominate. Suppose you dominate Bitcoin and it goes too beyond a point, then somebody else would say, oh, Ethereum, other ones are there, So there will be competition for healthier, at least, or whatever reason. There'll be some other method to apply. As was mentioned, that there is no inherent value. The way in which I look at crypto, could we consider, again, this thought just came to my mind, can this be considered intangible asset? Okay, because the application behind the whole thing can be used, Ethereum for smart contracts, for example. So when market will begin to see that what this currency does, that is how it has its own value. So, all these things, it's like software. What is it? Okay, now we recognize as asset, but if you say what is inherent value in code and other thing, it's like intangible. So it would be more like intangible property. And as I mentioned, that intangible property is often driven by the perception, the opinion, and people think this will be more useful in future or this will be less useful in future. I think people will take a call at it. That is how it would come. But most important thing is to give some kind of framework so that, at least people who are gullible are not unnecessarily harmed.
Thanks,
That's
Mr.
the fundamental principle.
So, Mr. Desai, you are saying that there are already rules and regulations are in place in different way. We need to collect them all. And also you are saying if Reserve Bank of India and SEBI not interested, there could be a separate regulator. So let's hear Nischal, Ashish and Siddharth one by one for a minute or so. But one small thing, Mr. Desai, you spoke about tax. I'm just quoting a recent Bloomberg report. It's quoting a banker, and I presume it's an Indian banker who had invested more than $1 million into crypto assets. And he says that with no clear income tax rule there, he's concerned about the possibility of a retrospective tax rates. If he's publicly known that is a big ticket crypto investors. So what he's saying, he has got his contingency plan ready, trading in an offshore Singapore bank account if a ban overnight is imposed. So people are concerned about capital gains on crypto also. Yeah, over to you, Nischal, then Ashish, and then Siddharth. Just a minute. Who should regulate it and how do you regulate it?
Yeah, I think when you think about crypto regulation, we can think about the internet. It's a lot like asking how do we regulate the internet, and the way that most countries, including India, are going towards it is break it down and see what, if that's e-commerce, then you have a different body regulating. If it's media, there's someone else going to regulate it. And that's a similar strategy that we can take for crypto, where if it's the currency aspect of crypto we are talking about, maybe the RBI should get into it. If you're looking at crypto, which is probably a security, then maybe the securities regulator, SEBI, can get in. So it depends on breaking it down and going. But I think that's the fast way. The slow way probably is get a brand new regulator who would do all of this. But I think most of the nations are going towards break it and regulate. But before that, I think India should come up with guidelines, and it does not necessarily need to be about it's more to do with do's and don'ts. What are the things that you, as let's say intermediaries, exchanges, what are the things like the basic KYC, AML, all of these can be released as a guideline even before we have regulation in the country. So I think that's my opinion around regulations for crypto.
Thanks. And Mr. Desai spoke about a new regulator. Nishchal is talking about multiple regulators. Ashish, over to you.
I think before talking about regulators, we should think about classification. What Nishal said is very right. There are multiple classifications of cryptocurrencies that can be done. And then we need to look at which body would regulate it. We on the panel today may or may not agree about the future of crypto, but one thing that we all agree today is that it doesn't make sense as a currency, right? It may make sense as a currency in some of the countries out there, but probably not for India, right? So if we are treating it as an asset class, then even in that, how do we classify different assets? Maybe under security, maybe commodity, and trying to then go to the right regulator to help regulate that, right? We exchanges today follow, one of the strictest KYCs, PMLA, taking care of, money moving in, out, making sure the source of funds are correct, but there definitely need guidelines which can help streamline this entire process, because now one exchange can follow one thing, other can follow the other, but how do you bring parity into the ecosystem while regulators are figuring out how to regulate cryptocurrencies, right? We can't leave it untouched during that time. So I think first, if there can be certain guidelines which can help until the classification is done, and once the classification is done, then we could go to the respective agencies for the regulations itself. We might not have to even create new rules. Let's start applying the rules that we already have, right? And then see what needs modification, what needs to improve, and what needs to evolve, right? Coming to, Mr. Rajiv's point, stock industry had the similar problems 10 years ago, right? We didn't stop this stock industry. We evolved. We put rules in place, checks and balances in place. And I think that's what need to happen in crypto as well.
Thanks, Ashish.
I was actually responding to your question that RBI doesn't want to regulate, and it was theoretical, and SEBI doesn't want to regulate. Then what do we do? So if people are not willing to regulate, then new one. But we have a lot of mechanism today to at least address 70-80% of the issues, PMLA and all those kind of. If you consolidate that, that itself will be a good regulatory framework. And
yes, you had said.
And again, only reason I thought that was instantaneous response, that this is a new technology, okay, like IRDA and other kind of things that have come up. So that is why idea came that, okay, you can drop people from SEBI, you can drop RBI, etc. And ultimate intention is that how do you protect a gullible person?
Okay. Definitely, yeah.
That is the short answer, and I think all the
Siddharth,
we have to explore. Why not?
Siddharth, Thank you, sir. Siddharth?
I think, see, Bitcoin is decentralized. It is above regulations. The idea why Satoshi created Bitcoin is that he wanted to take the power from the centralized governments and, all this, and give it to the people, give it to the network. So whoever is running the network has the say in participating. So it is already regulated by its own protocol. Yes, the use of crypto can be regulated, that if you are investing 100 rupees worth of crypto and you make it 200, this is the tax you have to pay. All those guidelines can be set by the regulating authority, and it is different from country to country. But the approach is wrong. You shouldn't regulate. You cannot regulate Bitcoin, because even if China has banned it, there are still users in China who are using Bitcoin. They cannot use it with Chinese yuan, but they can still access the network. So I would say it is a new concept. It is rule without rulers.
Okay. So that Mr. Agarwal, would you like to add anything? You have already said on this regulation part, but if you want to add anything.
Yeah, the only thing I would like to add is that the RBI will be the right authority to take calls on it. I would not say regulation. Whatever call is taken, that should be taken by RBI and the government, because they will be the most intimately connected parties.
Thank you. We don't know about the government, but as far as RBI is concerned, I think it's fairly well known, because RBI Governor, Mr. Saktikanta Das, also recently said, Deputy Governor also said that they are not in favor of crypto. So let's shift to another round at least. I mean, before we take the questions quickly, How do you protect the consumers? That's the repeated question, because it's a combination of very high-end technology and that currency. Now, India financial literacy is so low. I mean, even general financial literacy people don't have. And then on top of that, you have the technology part here. So how do you protect? And when rupee is partially convertible, I mean, no one can stop. All the family offices and all, no allegations are intended, but I mean, the transactions are anonymous outside the ambit of public scrutiny. There is no KYC norm. So there are many risks of, going money outside for money laundering, for other purposes, terrorist activities, so on and so forth, and the consumer protection. So maybe Nischal and Ashish, you are running the exchanges. Can you tell us a couple of minutes each? And how do you ensure consumer protection in a country where financial literacy is so low?
Look, I think you're right about the financial literacy, but if you look at India's tech literacy, I think that's high. People understand tech and internet, and they know how to use internet products. And crypto in general happens to be a combination of both. It's not just finance, but it's also technology. And so in a way, half of the education is done. What do we do about the other half? Maybe because there was no technology involved, maybe that's also one of the reasons why it was boring for people to just listen and read and understand about finance. Maybe now there is an opportunity for us to increase the financial literacy as well in India, thanks to crypto. So the way to do that is to push for education. And I keep repeating that because there's nothing better than that. Push for education around crypto or technology and finance. And the good thing is now you have that hook where the youngsters are interested in this. So why not use this to push for the financial literacy in the country? And to protect people, I think regulation is probably the best. And the thing is, today, no country has really completely regulated crypto. What countries are doing is they're in that discussion stage. So probably in India also, we should really rapidly get to the discussion stage. And one of the biggest aspect of the discussion stage is involving the industry. Because the thing is, there's this theoretical knowledge that you could acquire as a regulator or a government, but the practical knowledge exists in the industry. So a combination of, including the industry in the whole regulatory process will help us push this forward faster. I think that's
Ashish,
what I think.
Ashish?
Yeah. So let me address it in two ways. First is, making sure that the exchanges have strict KYCs, PMLA laws. Taking CoinSwitch, for example, right? We don't allow crypto withdrawals to happen. So we act like a zero DHA itself, only whitelisted money moving in and out, which gives regulators and users the comfort that, nothing bad can happen into the ecosystem itself, right? Coming to the user protection, which is very, very important. Education is just one part of the equation, but also, there are rules and regulations which exist in the stock industry, which we can adopt, right? Looking at different age or the income segments of people and putting limits, daily limits, monthly limits, yearly limits of the investment for the user, making sure that people are educated, having risk meters like in mutual funds. If a mutual fund is investing heavily on small cap, you would have a higher risk versus investing in high more stable government bonds, an asset class. I think something similar can be adopted into the crypto industry itself, while we start having the discussion and start formulating the regulations itself. But that user protection needs to be put in place by all the exchanges together onto the ecosystem. We can't hide behind the fact that regulations do not exist and we will not take action. We have to take proactive action. We have to do better self-regulations through IMAI, through PAC, and implement it on all exchanges, on all crypto ecosystems, and try to make sure that users feel protected and are protected in this industry.
Sure. Siddharth, over to you.
Yes, so I already mentioned about the regulation aspect. I still believe regulating it has to have a new approach. And hello.
Yep.
Yeah,
Carry on, please.
I think regulators have to have a new approach altogether. And See, overall, the countries, they, each country has its own way of regulating things, right? The taxation in India and the taxation in US is different. So, whenever we are looking at regulating something so decentralized, there has to be a global ecosystem. Like Swift works the same way to process its transactions globally. When it comes to Bitcoin and something which is so decentralized, a universal ecosystem has to come in place, but it will take time. It is just 11 years old, and it has come into limelight in the last 3-4 years. So I think we should give it time, and just not rush into it. It will be regulated very soon. I think in the next 3 to 5 years we'll see a much more mature crypto ecosystem, not just in India but globally. But I want to mention here that India shouldn't lose the opportunity. We've already lost the opportunity in the early 90s when the internet era was booming, right? A lot of developers from India, they moved to the US, and now they are settled, and they're just they've made a fortune. That was because the regulations came in really late. So we shouldn't. You shouldn't just ban it, right? Banning is not even an option here, but it is important to start. We have to lead it, right? So it is important that we should come with a primary framework first, so that the developers and exchanges and all the entire ecosystem can start flourishing.
Okay, thanks for that. So we'll hear Mr. Desai and Mr. Agarwal 2 minutes each, and then we get into the question. So essentially, as we debate, we don't know whether it will be banned or it will be regulated, and if it is regulated, then who will be the regulator? Nobody knows. But for the time being, it seems like crypto is transactions are on, and millions of Indians are involved in it. So how do you protect the consumers? Mr. Desai, you, and then Mr. Agarwal will end it. Sir, I think Mr. Desai, there's some connectivity issue. Then Mr. Agarwal, why don't you say? For the time being, you are in favor of ban. So we'll wait and watch as and when that happens or doesn't happen. But for the time being, regulation also not there. So how do you protect the consumers?
No, as I said, that I did not say that it should be banned. I gave my views only on the issue whether it has potential to become a currency or not. So I examined the issue whether it has got potential to become currency or not. Now it is the call which is to be taken by RBI and government. That is why I said in this matter the calls have to be taken by these two agencies, because they will be the most affected if tomorrow it becomes a currency or it starts acting like a currency. So I think the issue is that this is not a product which is a regulated product, as Ashish pointed out that some time back, that 10 years back, same problem was with the stock exchanges also. So I would like to slightly correct him that the basic product was a regulated product, because company law was always regulating the companies. Okay. And it was only the trading on the exchanges, which was listed companies only, which was being regulated by other agencies. So that is a very big difference. Another thing is that any product which is not a regulated product, underlying is not regulated, then at least a lot of information should be available in the public domain, so that the investors can protect themselves. Here, the problem is that neither too much information, sufficient information is available in the public domain, nor the underlying is regulated. So I think somebody has to take a call on the urgent basis, how to take the things forward.
Thank you, Mr. Desai.
I'm sorry, I was disconnected.
No, it's fine. So you're welcome back, sir. Last word is yours. The question was, or the context is, we don't know whether it's going to be banned or not. We don't know whether it's going to be, it will be around and regulated. We don't know who will be the regulator. But for the timing, it's business as usual for crypto. So tell us, how do you protect the consumers for now?
See, there are two parts to it. How do you treat this particular, let's call it asset or otherwise you sell? So there is already Consumer Protection Act. Okay, to what extent and all those things? There are few things that could be controlled, but we'll need to have some kind of more disclosure requirement, regulatory framework for exchanges and other ones, licensing, whatever regime you want to put in place would be very important. It's not that every asset has to be regulated. Okay, like gold. Is it regulated? Possibly not. Okay, silver, it's not regulated. So there are many things that are not regulated, yet they are in the marketplace for ages and it's going on. So unless they are traded on the market or otherwise, the trading rules are there, but the asset itself, there is no particular, So I personally think that looking at strategic objective of the government should be to purely, as you rightly said, protect the interest of the smallest person. That is what bigger person, it's a different thing. But otherwise, there is no end to it. They are sophisticated enough. They know about the risk, etc., etc. So somewhat similar to securities law, I think we need to have, some kind of framework so that there is enough information available, as Mr. Agarwal mentioned, to people. There is enough warnings given. There are enough disclosures and all those kind of things. And there is some kind of a transparency in the whole process. So that is what would be very helpful.
Okay. Yep.
But we have to figure out what is the first thing. Yes, we need regulation. Yes. Then how is the second part. Then who and by when. These four things usually,
Thank you.
Know it better.
Thank you, Mr. Desai. I think, yeah, that brings us to the end of a rather animated discussion, little more than an hour, and we'll take a few questions now. Mr. Garg is back. So this discussion today, actually, we have raised more questions, and all of us in search of answers. It's more like an MPC, Reserve Bank of India's Monetary Policy Committee meeting. It says that one dissenter, rest of them are, of course, there is a 5-1 out of 6. Here, 5 members, but 4:1. One dissenter, Mr. Agarwal, and the rest. But if we take Mr. Garg into consideration, the full MPC, 6, today's MPC, our MPC kind of thing, today's panel, including the keynote speaker, then again 5:1. 5 in favor of crypto, 1 is against it. So all of us said that no, time is, this is not a question of, not all of you, 5 of you said it's not a question of yes, we have already said it yes. So what we look for is the glide path. Again, to use a monetary term, glide path is how do we, who will, for the first it has to be the guidelines, and then the regulations, and who will be the regulator. As I said, it's we have raised more questions, had very few answers, and it's like a real T20 game. Till the last ball is bowled, nobody knows which lobby wins. The ball is in the government's court. It was supposed to be decided at the budget sessions, but it's not yet done. So let's wait and watch whether we should say yes to crypto. If it is, then in what form and who is going to regulate, or should we go for a ban like China? So that brings us to the end. And the second part, or the third and last part, is the question. There are many questions, but many of them are repetition. So I'll just only pick few of them. Let's, Mr. Garg, ask you this question. The government has issued, the question is about Samyak Lohade. The government has issued national strategy on blockchain. It has multiple issues on the executive arm of the government. When can we expect a policy draft from the government, and what should we expect? Essentially the same question. When do you think the government will come up on crypto? Sir, you are in Delhi. You are in a better position to answer this.
So I think the discussion also was revolving around the crypto is not one monolithic single product. I think that's something which we should appreciate. There is technology, which is the blockchain and the cryptography. There is financial products, which is currency, decentralized finance, and many other asset kind of, all these are rolled into one. So technology has never been regulated, whether it's internet, whether it's these centralized database system on which most of the assets or most of the databases, most of the, the dematerialized CDCL and NDCL, etc., are not directly regulated in terms of the technology. They are regulated for the financial product or the asset which they. So I think it's impossible, it's unlikely that the government would ever sort of regulate the technical aspect of it, right? But it's many times difficult to separate the two. So what needs to be regulated or what needs to be decided, I think we should be clear. One is the currency aspect, and the other is the financial services and the financial assets. So there are three things which are essential, and there is one accompanying thing, which is the contracting, which is the basis of creating the assets. So you have, I think, four big aspects which require discussion. On currency, I think I am reasonably clear that currency cannot be allowed to be in the private space. And when the governments come up or the central banks come up with their own digital currency, they will ban the private currencies, which even otherwise with the central bank currency or the government or sovereign currency coming in will go out of the fashion. Nobody will use that. So that is the way this currency, I don't think you need to regulate the private cryptocurrencies as such currency. So that aspect is clear to me. It's the financial services and the financial assets, which are the key things to be regulated. We have examples. We have in the financial world today regulators sort of regulating different assets. So you have separate regulator for insurance, you have separate regulator for securities, you have separate regulators for something else. And you also have an example where all the financial services and assets are in a way regulated by a single regulator, which is the IFSCA, unique authority which has been created for International Financial Center. So my sense is that it will be impossible to separate out the insurance services delivered on the decentralized platform, the security services, the capital raising, etc., and it requires a very different ecosystem. So I think it will be advisable. That's what I said when I was speaking, that it might be advisable on the lines of Securities Contract Regulation Act. We may bring Crypto Assets and Services Contracts Regulation Act or something and create an authority for regulating the financial services and I would also say that the Contract Act requires a massive revision, because the smart contracts, which are the basis of most of these services and the assets creation in the crypto platforms, cannot be regulated or cannot be covered by our Contract Act. So I think that's where my sense is.
Okay, thanks. Siddharth, if you can take this question. This question is from Gurinder Dua. How can we encourage innovation in the blockchain segment, encouraging to build digital assets, etc., etc.? So he's asking for more innovations in blockchain. You are the right person to answer. Yeah.
See, blockchain and cryptos, this ecosystem is evolving every day. I think a year ago, nobody even knew what decentralized finance is. NFTs were unheard of, right? And it is evolving every day. Now there are projects which are working aggressively on NFTs. There are over 150 DeFi platforms out there already, right? And they are doing great. The value locked in the smart contract is in billions. So it is evolving every day. To encourage it, it is important to get primary education on how cryptos work, how a decentralized ecosystem works, and how these smart contracts and trustless ecosystem work. So that's the primary education. And also, I think some push from the government would really, speed things up, because there are a lot of developers, but they are afraid to develop in this ecosystem because they think it's not regulated, and they might get stuck in something. So if the government gives a good runway, right, that you can develop, and you can explore several possibilities, like several sandboxes have to be there. If that is done, development would be great.
Question for I don't know whether you want to answer both Nishchal and Ashish. What are your expectations from the cryptocurrency bill? Yeah, Nishchal.
Yeah. So I think the expectations remains the same, right? Classification and regulation, right? Bringing clarity into the ecosystem and promoting blockchain and cryptocurrencies use case and innovation on that.
Okay, Nishchal.
Nothing significant to add. I think the fact that I think it's ultimately for a bill. I think there should be industry participation, and that is something that I don't think has happened yet deeply. And I think the other important aspect is we should not over-regulate because this is a new technology where most of us, like for example, if we adopted regulation hypothetically, let's say last year, then the question this year would have been, what do we do about NFTs? Because that's something brand new and we've not thought of it. So I think some light regulation, some basic checks. Which are acceptable to everyone, like KYCs, make it necessary. Everyone is in favor. So some light regulations will help, but we should not over-regulate the space right away. We should let it evolve and breathe more. I think.
Okay, there are many questions, but for time's sake, let's take two more. This question is from Rajendra Agarwal. Let's me ask these questions to Mr. Rajiv Agarwal, former SEBI whole-time director. With millions of Indians investing in Bitcoin and other cryptocurrencies, is it advisable to take drastic measure like banning them? That's the question. Banning crypto. Yeah.
Tamalji, I did not say that.
No. It's just you explain. I mean, it's not that you have said it. It's not. Let's not presume that you have said it. The question is.
Everybody
should it be banned? That's what they're asking.
So I won't have any view on that because this is a very delicate issue and a lot of money is also involved. So it has to be handled in a very balanced way. So what way out RBI and government can find out? I mean, first thing is that they have to determine. I mean, what is their opinion? What really do they want to do? I mean, I have given my opinion, but that is not something. I mean, there are many aspects I have missed out. So thing is that first the government and the RBI have to take a call. My discussion was limited to the issue from my point of view, whether this can be a potential currency, because that is the issue, that is the expectation which most of the investors are having. They are having the expectation that tomorrow this will be a currency, therefore it will have a lot of value. So this issue has to be decided by the concerned people. So that is why I also said that this issue has to be decided by RBI and the government because they are the right agencies to decide that. So I will not be.
Okay.
Yeah.
Fair enough, sir. The last question, and let me ask Mr. Garg to conclude it by taking this question: is this if when RBI it's from Sukhdev Singh Bajaj, when RBI is coming out its own digital currency, so what's going to happen for the cryptos? So
RBI is rightly primarily concerned with the currency aspect of it, less with the assets and the services aspect of it. And they have expressed it, I think, very clearly. It was even when the committee was considering that they won't allow a private cryptocurrency to work in the country. And the answer for that is what you just mentioned, that the RBI at some point in time, I think it's already, it's not that fast. In fact, no central bank is that fast. Even US Fed has not come out with the digital dollar still. So the RBI should expedite, and rightly so. And as and when it comes with a digital rupee, that is one thing they should do it. And second, they should also participate in some international effort to bring an international currency. Otherwise, what will happen is that the digital dollar will become the effective digital currency of the world. You have options like SDRs being converted into a digital SDR, which then can have in this ecosystem of digital system, derived values or relative values can be determined very easily. So I think to summarize, 2 steps. One, you should come up with digital rupee as soon as possible. Second, join in an international fund to bring an international currency, which is agreed to by all nations rather than one single country dominating this. But I don't think it will be very late before the US Fed or US government comes up with a digital dollar. The sooner we get our act together, it will be better.
Thank you. So I've already summarized what we discussed. Just 2 more points I want to make is this central bank digital currency CBDC is not an alternative to crypto. I mean, for the audience, not for the expert, is just a wallet or an electronic purse, period. So it would not compete with crypto. It will not substitute crypto. And other part is this, I think there is a misconception that many of us think crypto and blockchain are the same thing. It's not. Blockchain is the underlying technology. It's a system of recording information the way it makes it difficult to tamper with, impossible to change, hack or cheat the system. It's a digital ledger and anonymous ledger, which has many other uses apart from crypto. So thank you, Mr. Garg, Mr. Agarwal, Mr. Desai, Mr. Ashish, and Siddharth. That brings us to end to day 2 of Business Standards 11 event 9-day series on BFSI. Today we discussed yes to crypto. Should we say yes to cryptocurrency? 5 of the 6 of eminent speakers, including the keynote speaker, said yes, it is time to say yes. But we need to find a glide path, put the regulations in place, put the guidelines in place. Over to you, Manish.
Thank you, Tamal. And many thanks to all our esteemed panelists. Such an insightful discussion on a red hot space. Thank you to the audience for joining us today. Thank you, Jana Finance Bank, our partner. The next session is on your screen now. It's on Monday, October 25th. Again at 4:30 p.m. Advantage NBFCs.
Thank you very much.
Have a great weekend. See you.
Bye. Thank you.